Okay, I think we will make a start and people can continue joining as we go through. Um, hello everyone, thanks for joining us for today's Monitor Explained webinar, where we'll be taking a deeper dive into the first issue of Monitor 2025. This is our quarterly report that gives you an up-to-date view of current non-energy costs. So just a little bit of webinar housekeeping. This session is being recorded, so it can be shared with you after and for any demand. If you have a question, please submit it in the Q&A function throughout. And at the end of the presentations, there'll be an allocated time where I'll run through these with our experts. Any questions that we can't or don't have time to answer today, we can take away after the session. If you are a customer and haven't got your copy of Monitor just yet, you can contact your account manager for a copy or access this helpful guide by logging in and signing up to EDF's Market Insight portal. The address should be displayed on the screen there. The Market Insight portal is your gateway to regular updates, and it's there to help you make the right decisions for your business, and have access to quality data and expert analysis, which will help you navigate a complex commodity market. So I'm Sophie Huggan. I'm an account manager at EDF, and I'll be hosting this session today. Joining me are technical experts from the Wholesale Market Services team, David Edmonds, the head of pricing and valuations, Hugh Boyle, and Dan Minifie, lead analysts from the pricing and valuations team. David, perhaps you could start with a quick overview of what we're going to be talking about today.
Sure, thanks, Sophie. So we'll start off, as we have for the last few versions of this webinar, with an overall update of non-energy costs. We'll switch our focus to look at April 2025 from now, as that's coming up. So the idea for that is to help with budgeting going forwards and to understand the variability that we could still see on a number of these non-energy costs. Then probably the main topic for today is we'll go on to TNUoS. So there's an update for April 2025, but then particularly flagging some of the big risks and uncertainties we have from April 2026 as a bit of a look ahead, where we are coming up to the next 5-year TNUoS price control, but Hugh will talk about that in more detail in a little bit. And then we'll come on to an update on what's happening with BSUoS, where we've got some new rates confirmed and a couple of risks being flagged by NESO, the National Energy System Operator, there as well. So to start with, I'll take us through a bit of an update of stepping through each non-energy cost one by one. As I said, we'll come on to BSUoS a bit later on, so I won't give too much detail on this one just yet. But to start there is still quite a wide range of outcomes that we could see. The low range that's shown here is reflecting the rates that NESO have set already. So they fix rates ahead of time. In December each year, they will fix rates for the coming summer and the following winter, and they have already set those rates. The reason we have a high range that's there is it is still quite uncertain what the actual costs that NESO incur for this will be. And if there's a situation where costs are much higher than they have set the rates at, then they do have the ability to increase those rates and charge suppliers and consumers more to cover their costs as they come in. What we've been seeing and why there's still quite a wide range here is NESO in their most recent updates where they set the winter 25 tariff have been flagging risks that they might under recover against the rates that have been set already. So it does feel like quite a real risk that we could see the first opening up of those rates since it moved to this fixed rate regime from April 2023. So that's one definitely to keep a bit of an eye on. In terms of what we think the most likely outcome is, which I've tried to summarize on the right-hand side of this table, the low rate is still probably the most likely because they have been fixed by NESO, but just flagging that there is a real risk that they could outturn higher than that in terms of what we actually end up getting charged for BSUoS. Moving down to CFD, so this is another one with a very wide range of outcomes. Now, the reason for that is the way the CFD mechanism works and how it is related to wholesale prices, which we've seen certainly over the last few weeks in particular have been incredibly volatile again. So that can impact the CFD rate. The CFD works by giving generators a fixed strike price for their generation, and then the CFD element is a top up from market prices to that fixed price. What that means is if we see lower wholesale prices, the top up gets bigger that suppliers have to pay. And if we see higher wholesale prices, the top up is smaller. That makes the CFD move around a lot as wholesale prices move around. And that's why we have such a wide range. In terms of where we think is most likely as an outcome, we would generally expect that to be closer to the high end of this range. Now, the reason for that is wholesale prices can rise by a lot more than they can fall by, in all likelihood. So where we could see much, much higher prices, if we saw conditions similar to the energy crisis start to repeat themselves again, that's where you could even get to negative CFD rates, as we've seen in the past. But prices probably can't fall by as much as they could rise by, and therefore you wouldn't see as big increase in the CFD rate as you could see a decrease in there. So in terms of a kind of central view, below the high rate, but somewhere closer to the high rate than the low rate is a good place to be, assuming that could outturn. This is one that will move around a lot as we go through the year, and we'll gradually pick up outturn data as we get it coming through. So this again is one definitely to keep an eye on for budgeting as we go into the April 25 year. On the capacity market, again, wide range on this one, and the key reason for this is waiting to see the outcomes of the T-1 capacity market auction that will happen in early March. That means this range will narrow quite a bit in about a month or so. So it is worth keeping an eye out for the outcome of that. We have a central assumption of what the cost could be for that auction, but depending on where the clearing price is, of the balance of how much capacity goes into the auction and what prices they're looking to get for their capacity, there could be a much higher or lower cost than we're expecting, and that's what drives the range. That also means that the best view is probably somewhere in the middle of where we're showing that there. It is also worth noting that that number is so big because it is only reflecting the charge that applies between 4 and 7 p.m. on November to February working days. If you want to get an annualized view, you'd need to look at your proportion of consumption in those times compared to your consumption across the whole year. And often that comes down to kind of a 3, 4, 5% of the rate shown here, depending on customers' consumption shape. Moving down to TNUoS, so these rates are already confirmed. They obviously do vary a lot by site, so it's a difficult one to kind of get an overall picture of, but they were set back in December 2023 because they're set 14, 15 months ahead of the start of a charging year. So those are already known. So not much more to say on TNUoS. On FIT, if we move down, it's the feed-in tariff. Key variable on this one is seeing outturn renewable generation, and that's why there's such, well, not too wide a range, but still quite a wide range on that, because we don't know how much the sun will shine and how much the wind will blow across the coming year. Again, we get information as we go through the year that narrows that range as we see it outturn. So another one to keep a bit of an eye on. But for now, roughly in the middle of that range, so kind of around £8.50 to £9 a megawatt hour is sort of broadly our best view of what might happen there. Onto the renewable obligation, or RO. So actually in the monitor report that came out, this was showing a narrow range. In the last few days, we've actually seen inflation confirmed by Ofgem for the 2024 calendar year. So that does now mean that we know that the renewable obligation rate for April 25 will be £33.06 per megawatt hour. That's because the buyout price for a ROC has been set at £67.06 after it's been inflated by RPI inflation going into this coming year. So that one is now known. On TNUoS, similar story to TNUoS, except the rates were set more recently. And so Hugh will come on to what these have been. But at the end of January, NESO have confirmed what those charges will be for April 2025. They do again vary by site. So it's one to look out sort of, for individuals, but they are now known at least. And then finally, just coming on to the last two that we've included in the last couple of webinars are new charges coming through this year. So on the EII support levy, so this is the charge to recover the network charge compensation scheme that pays EIIs 60% of their network charging back a year later. We expect this to be broadly the same as it is outturning this year, but there is still a range depending on the specific charges that the EIs will be getting, depending on what chargeable demand is as well. But somewhere in the middle of that range is what we expect it to be. And the reason for that really is because when you add up DUOS, TNUoS and BSUoS charges overall and compare them between the April 2024 year and the April 2025 year, they are at broadly similar levels overall in terms of the recovery that's needed across those charges. And therefore expect a similar level of that rate to come through to other consumers. And then finally, the nuclear RAB scheme. So this is about the RAB funding mechanism for new nuclear sites, particularly Sizewell C. A lot of uncertainty on what this charge will be. The reason we've got a zero low rate there is because it's not yet reached financial investment decision or FID. So until that has happened, there is a possibility that it doesn't come through as a charge this year. We think that's very unlikely. But until it happens, it's possible it could be zero. In terms of the high range, again, we don't think this is likely, but there's not a lot of clarity over exactly what the charge will be and what the basis is for the number that will ultimately feed through into the rate. So this is reflecting a pretty high view of a broadly flat recovery of the total cost of Sizewell C across the life of the project. We think the reality will be somewhere closer to the low range, not zero, but maybe kind of the order of £1 a megawatt hour type level is what we're expecting it to be. We will let everyone know as soon as we have more information on that. But in terms of an assumption to use at the moment, somewhere closer to the low rate of that one is the best thing to go with. I've also just seen a question has come into Q&A that I can just cover off quickly now as well. So the question was asking, similarly to triads, can you make savings on capacity market charges by reducing usage between 4 till 7 p.m. in November to Feb working days? And yes, that's absolutely something that can be done. And given these rates that are shown here are very high, but will also be increasing going into future years, that is a big opportunity for people to save money on their capacity market charges. And it's really part of the design of the scheme of that rate being charged then, because the capacity market is there to make sure there is enough generation capacity at those peak times. If you can decrease demand in those times, you need to provide a bit less capacity to manage that, and makes it cheaper for the system.
Great. Thanks for that overview, David. As you've said, it is hopefully useful for our customers going into this April 25 year to look at the latest forecasts and that to help with budgeting for energy. Which are the main costs people should keep an eye on as we go through the year?
Yeah, so I think that the top two really, as sort of highlighted as I went through, are the ones to keep an eye on. Both of them are linked to wholesale prices, but in different ways, and also linked to renewable generation, which is highly uncertain of what will actually happen each year depending on the weather. So they are likely to be quite different to what's expected now. On BSUoS, as I mentioned, NESO have flagged that under recovery against the rates they've set is quite likely. So I think keeping an eye on that one is important, because it is possible we do see those rates increase a bit. And then on CFD, basically that will likely move around quite a lot, both up and down, depending on where wholesale prices go. So it is one to keep an eye on. And there are also some big generators that are approaching the start of their CFDs, and they could increase the cost a bit that comes through depending on where wholesale prices are relative to their strike price. So there's some of the big offshore wind farms, as well as a lot of solar capacity coming through. Wind farms like Dogger Bank A, Sophia, and NNG will add a lot of capacity of a few gigawatts as they come on. Also, probably as well, just worth keeping an eye on some of the couple of new charges there, which again we'll share more information as and when we get it, and it starts to become a bit more certain of what those charges will look like.
David, I think just while we're on these April 25 charges, there's been a question in the chat. Will the EII support levy be charged to those who receive the support?
So I think our understanding, which has required some legal text clarifications, is that the EIs will not have to pay the EI support levy. I'm just checking down, and you don't disagree with me when I say that. But
Yeah,
I don't
I think
think
that's
they are.
right. Yeah.
Yeah.
Great. Yeah, so thank you for that, David. We're now going to move on to some news and updates on TNUoS. I believe you'll be taking us through this, Hugh.
Yes, I think that's right. Yeah, I guess if we could, perfect, thanks. Move on to the next slide. So TNUoS, I guess for those who are less familiar with it, is a transmission network user system charges. This is paid by all users, both generators and demand customers, to support the operation, the maintenance, and investment in the transmission network. And although everyone pays for it, demand customers pay by far the lion's share of TNUoS charges, so about 80% of the total. What we've had recently on TNUoS is NESO, so the National Energy System Operator, formerly National Grid ESO, published the final tariffs for the April 25 year at the end of January. And this was a bit of a good news story, at least compared to where we were sort of November last year when they published draft tariffs. We're seeing about a sort of £400 million reduction in the allowed revenue NESO requires for the April 25 year. And that will feed through into a reduction in TNUoS tariffs. And almost all of that reduction is going to flow through the transmission demand residual. So all demand customers will see all of that benefit. That benefit is worth about £1.60 a megawatt hour if it was recovered volumetrically. So if you take that £400 million saving, spread it over the sort of roughly 250 terawatt hours of national demand, you get back that £1.60 megawatt hour. However, as mentioned, this is going to impact the demand residual tariffs, and these are recovered on a banded pence per site per day basis. That does mean the impact will be customer specific. So if you go and look at the monitor report, you have the full table there of the charges, whether you are sort of low voltage or higher voltage customers, you'll be then banded by your consumption or your agreed supply capacity and be given a banded pence per site per day charge. And so the impact, you may not see that £1.60 megawatt hour impact depending on what band you're in and the precise consumption of your individual site or portfolio of sites, but that's broadly the benefit you should see on the whole. And I guess while I'm thinking of it, I guess I said good news today, that 400 million reduction. What's driving that? I guess some of it is just genuine cost reductions from the transmission system operators. However, part of it at least relates to investment works that have been delayed. So you may have heard the acronym ASTI, it's Accelerated Strategic Transmission Investment. It's a series of projects, I think about 26 odd projects or so, that aiming to connect 50 gigawatts of offshore wind by 2030. And at least a few of those projects were intending to be started on in the April 25 year have been delayed further down the road. So although that's 400 million reduction good news today, at least a good chunk of that is just postponed. So it may crop up again in future years as those projects get underway. Yes, I think for the April 25 year, that's it. So in short, yeah, good news story, tariffs are lower than we had expected them to be. And yeah, see the monitor report for the exact impact on yourselves.
Great, thanks, Hugh. And what are we expecting in future years?
Future years, so I guess, yeah, I mean, if you look at the sort of top left chart there, you see TNUoS, unfortunately, year-on-year increases are the norm. And April 24 year was a bit of an odd one where there were some tax breaks for investment in plant and machinery, but typically these charges unfortunately do go up and up year on year. They are governed by a price control framework because you can't get your electricity from another transmission system. It is a natural monopoly, and that's what's happening in the future. So from April 2026, the new price control period will begin, running for 5 years. It's called RIIO-T3. I wouldn't worry too much about the acronym, just a name for it, but it's just a regulation framework governing how much money can be recovered by the transmission system operators, which ultimately will feed into TNUoS tariffs. Worth saying there's a great deal of uncertainty over the next few years to meet net zero targets, sort of to connect all this offshore wind, to reinforce the grid, to enable electrification of heat and transport. It's going to cost a lot of money. And that's reflected in what we've seen at the end of last year, the transmission system operators draft business plans for this new price control period. What do they want to spend? So if you look there, the sort of bottom right chart, you see what they think they're going to spend in the current price control period, RIIO-2. It's not finished yet, but broadly, we're looking at about sort of 23, 24 billion pound spent since April 21 to March 26. What they're looking to spend from April 26 is more than triple that, so about 77 billion pound. So really big numbers here. Worth mentioning that although this is the expenditure and the investment that the transmission system operators will be spending in RIIO-3, that doesn't necessarily translate exactly into an increase in TNUoS tariffs over the same period. So this money will be recovered over the lifetime of grid investments and assets, which can be many, many years or decades. So that tripling of expenditure by the transmission system operators won't lead to a tripling of TNUoS tariffs from April 2026. That being said, we will expect bills to go up over time, and there is a great deal of uncertainty over the how early and by how much. Part of that as well is relating to, I guess, finance costs. If you don't increase TNUoS tariffs in the short term to pay for all this, the investment has to be funded in other ways, say through debt and equity, and that itself will lead to a consumer cost that ultimately is fed back through TNUoS tariffs as well. So you can either pay more in upfront or you can pay more over time. It's just different ways of funding that investment in the grid. And I'm trying to think if there's anything else worth saying here. I guess this is just the start of a long journey. So the approvals process for the new price control will carry on over 2025. Ofgem, as the regulator, will get a look at this and give its feedback in the summer. And what the transmission system operators have asked for, they may not get everything. There's various revisions and appeals process, that sort of thing. But doesn't necessarily mean it will go down. Ofgem's job here is really to make sure, not just keep TNUoS bills low, it is to make sure that any spending is in consumers' long-term interests. So if this investment, for instance, is to help reduce constraint costs in the longer term, and there's a net benefit to customers from doing that, then Ofgem will say likely approve that. Yeah, I think very big numbers. I think 20 to 30% increases in real terms in TNUoS over the next few years are very plausible. And additionally, I think some estimates out there from the transmission system operators even see TNUoS doubling in real terms from today by the end of the next price control. So very big numbers. TNUoS is a difficult one because the impacts are often very customer specific, as we just looked at with the April 25 tariffs. But if you took all the money recovered from consumers and smeared it over national demand, TNUoS might be something like sort of £16 a megawatt hour in today. So if you're looking at doubling that by the next price control, TNUoS really could be looking at sort of £30, £32 a megawatt hour impact on customer bills.
Great, thanks, Hugh. So what are the next steps for us and our customers, and what should everyone be looking out for?
I guess next steps to look out for is, like I say, it's the beginning of a long journey on the price control approval process. Ofgem's draft decision or determination will be expected in sort of June, July, their first opportunity to weigh in on what they think of this 77 billion proposal. After that, NISO will publish a 5-year TNUoS tariff forecast in August based on Ofgem's draft determination. So that'll give us a lot more concrete insight into how does this pounds billion investment plan look as sort of concrete TNUoS tariffs that will impact customers. And then if there's any sort of remaining questions or appeals or revisions after Ofgem's draft decision, that can lead to getting the CMA involved and can lead to Ofgem giving its final decision probably towards the end of the year. So they've said Q4. One of these things, I think, from looking back historically, probably very tail end of the year, sort of November, December time, Ofgem will give its final decision. And then the first set of tariffs NISA will publish for the April 26 year will be published end of January 2026. So unfortunately, it's sort of very early days, but those are sort of the milestones to look out for as we go through 2025.
Thanks for that, Hugh. Could we move on to the next slide, please? So now that we've looked at TNUoS, we're going to move on to BSUoS. Dan, please could you take us through this?
Yeah, sure. Recently NESO, or National Energy System Operator, formerly National Grid, ESO, they have published the winter 25 tariff at the end of December. So winter 25 is the period covering October 25 to March 26, and that has now been set at £15.69 per megawatt hour. That is a significant increase from the draft tariff of £11.99 that was previously published by NESO at the end of June. So NESO's view of total costs for winter 25 has increased by £550 million approximately from draft to final tariff, which is why the tariff has gone up so much. And there are a number of contributing factors behind that increase. So firstly, there's a £200 million increase in their view of balancing costs. That is largely driven by an increased view of constraint costs across the system, but also wholesale costs as well. NESO have also said there's a £100 million increase in internal costs from the draft tariffs to final tariffs, and this is for funding new projects and increased headcount. And then the largest part of the increase of £250 million increase is due to their treatment of under or over recoveries, which have to be passed through from previous seasons. So in the draft tariff, NESO forecasted an over recovery of about 86 million from previous seasons. That has now flipped to an under recovery of about 164 million in the final tariff, which is what they have to essentially add on to the winter 25 tariff. So it's just to expand a bit more on that third bullet point. So NESO currently are holding a cash surplus to date, and they are currently forecasting that by the end of the current season, so that's winter 24, they think they will over recover by about £224 million. However, by the end of summer 25, so April 25 to September 25, NESO are now predicting that things will look quite different. They're predicting the cumulative under recovery of £164 million. And that is, as I've said earlier, is partly due to an increased view of constraint costs and also wholesale costs as well. So this, as David was mentioning earlier, this really indicates that NESO think there is a heightened risk that the summer 25 tariff particularly, which was previously fixed at £10.74 per megawatt hour, there is a risk that could potentially be reopened within period if that view of costs increase further. NESO have a working capital of about £300 million to manage any under recovery, but they do have the power to reopen tariffs if they think there's a risk that amount could be exceeded. So yeah, we'll wait and see that one. And then finally, on BSUoS as well, with the recently approved modifications at CMP 408 and CMP 415, we will now see the next set of final tariffs being published at the end of December 2025. And at that time, NISA will confirm both the summer 26 and the winter 26 tariffs at the same time. That's a change from the previous approach, which had a 9-month notice period for each period. So rates would have been published at the end of December for the following winter, and then at the end of June for the following summer. That's now changing. So both the winter and summer rates will only be published in December, so once a year. However, NISA have advised that they do intend to publish an initial set of views before those final tariffs. So there will be initial tariffs being published in June 2025, followed by draft tariffs in September, and then before being finalized in December.
Great. Thank you, Dan, and thank you also to Hugh and David for that overview. That brings us to the end of our prepared content, but we've got some time for questions. I've seen a few already come into the Q&A function. You can continue to put questions in there as we go through the Q&A session, but we had a few questions come in prior to the session, so we're going to start with those. The first one, which we've already covered a little bit earlier on, is, are there any updates to any of the new costs like EII or RAB?
Yeah, I can take this one. So basically, there haven't been too many changes since the last monitor report and webinar, but we do have a bit more certainty on magnitude of the EII support levy costs. So Elexon are now publishing estimated costs. They publish these 6 months after the end of a settlement month. So these are now available on their website between April 2024 and August 2024. And the range which they have currently is between approximately 60 and 80 pence per megawatt hour. These are only estimates though, so the final cost won't be known until Elexon issue the final supplier invoices, first of which should be sent out in April 2025, and that will be for April 2024 costs. And yeah, as a reminder, the EII support levy is designed to fund the new network charging compensation scheme, which compensates EIIs for 60% of their network costs. So that covers GEOS, TNUoS, and BSUoS. And that compensation will be paid around 12 months after a settlement month. As discussed earlier, with the recent increases we expect to see in the future for TNUoS and BSUoS, this would also feed through then into higher EII support levy as well. On the nuclear RAB scheme, so that's designed to fund the Sizewell C nuclear plant during its construction and operation. Yeah, we haven't really had many updates since the last time. We're still waiting really on the final investment decision to be announced. So the government have previously said they plan to finalize this sometime in the spring. We don't know when exactly, but once that is announced, Ofgem will publish an allowed revenue, and the low carbon contracts company will then issue the first set of levy rates that will be chargeable to suppliers, but they have to give at least 30 days notice. So that means, yeah, there won't be anything before April at the very earliest, but it will probably be a bit after that. Yeah, and we still don't really know much, or don't have much clarity on the magnitude of that cost, as David was saying earlier. I think there are some other new costs and schemes on the horizon which have been talked about in the news recently, which are lightly touch on. So there's one of them is the new CC or carbon capture scheme called the Dispatchable Power Agreement Scheme. And we've seen the first project in Teesside has just signed an agreement. There's also been some news on the bridging mechanism to support Trac's biomass conversion plants once their current subsidies on the CFD and RO come to an end in 2027. And there's also a low carbon hydrogen scheme to support production of low carbon hydrogen. But we think this is likely to be funded by a gas shipper obligation. So we don't think it will be on electricity. But yeah, with all these new schemes, these are all quite a few years away yet, and the details are still very unclear at this point. So yeah, we can't really say too much more about them now, but we will cover these in more detail in the future as they become clearer and more relevant.
Great, thanks, Dan. So moving on to the next question, why aren't NESO or the DSOs able to give greater advance confirmation of TNUoS or GWOS charges? I think, David, you could probably take this one.
Yeah. So I guess the headline reason is it's difficult to forecast what the charges are actually going to need to be to recover the cost that both those entities are looking to recover. What I'd say in terms of GWOS, there is quite a lot of notice. So it was previously 15 months, now 14 months notice. But that does give a pretty good level of certainty. So 14 months ahead of the start of a year, you find out that 12 months of charging. So you actually know up to 26 months ahead at that point what GWOS charges will be. So that does sort of support being able to fix costs and have cost certainty on GWOS. On TNUoS, it is much closer to the start of the year that those rates get fixed, so a couple of months before the start of the year. So that's not as helpful as GWOS. It's probably worth just flagging there was a decision last year actually on a CUSC modification, which I think was CMP 286, and that had been raised to look at aligning more TNUoS timings to GWOS timings and giving a bit more notice. That was rejected by Ofgem last year, so it is sort of has been an active conversation in the industry. The decision has been not to do that because there would be a greater risk of those charges not being sufficient and potentially having to be adjusted or leading to volatility in later years to recover under recovery or over recovery against those charges being set. So it's all really, that's where the costs are uncertain, someone has to manage what that uncertainty is. And it's been decided that the DNOs and the TOs are able to manage the uncertainty to those levels of how it's set. It's probably worth just linking back to the update Hugh gave us on the Rio process. So in terms of the timings on that, the decision ends up being quite close to the start of the charging period, which isn't massively helpful when we've got such a high degree of uncertainty of what TNUoS charges will be. So where we're talking billions of pounds difference over what could be recovered across the industry, that's not particularly helpful. At the same time, it's a huge decision that has to be made, and there is a lot of negotiating going on to get the right level of cost recovery to put enough money into the transmission companies to enable them to deliver the investment that's needed, but not put too big a burden on consumers. So it is a difficult balancing act. I do kind of agree with the tone of the question in terms of particularly on that process, that it would be helpful to get as much certainty as we can ahead of time. And even though it might not be exactly the right number, I think for that Rio process, some sort of industry consensus forecast would be a very helpful thing to have for suppliers to be able to help consumers budget and set tariffs at an appropriate level going forward.
Thanks, David. So our next question is, don't we normally have an update on capacity market costs at this time of year? Hugh, I believe you're our capacity market expert, so do you want to take this?
Sure, Sophie. Yeah, can do. So yeah, no, good question. Short answer is yes. The reason to blame is general elections. So when I started in this kind of role a few years ago, you had capacity market T-1 auctions, the T-1 mean in year ahead in December for the upcoming year. So they were generally year ahead. Then they got kicked back to January after one snap election, then to February after another one, and just again last year with the general election, you go into PERDA, you can't publish anything related to the capacity market, so all the timelines get delayed. So now we've pushed back the auctions. I think David might have mentioned at the start of this webinar that will take place in March this year. So unfortunately, a bit later than usual. We'd normally have had the auction have happened by now. But not long left to wait. So the T-1 auction is penciled in for the 4th of March. So hopefully we'll have some more certainty on that soon. And the T-4 auction for 28-29 delivery will be the following week on the 11th of March.
Great. And a follow-up question to that, Hugh, which is in the chat. What is EDF's view on the outturn of that capacity market T-1 auction in March? Do we have a view of that?
It's probably not appropriate for EDF to comment, particularly as EDF parent company has assets participating in both the T-1 and T-4 auction. However, I'd probably directly ask it to the monitor report. There's a bit of back-end detail in there. You can look at where the previous T-1 auction cleared, which was at £36 a kilowatt, and look at what's happening in the current auction. So, and again, I'd say patience. There's only a couple of weeks to go, so hopefully we have some more certainty there.
Yeah, thanks, Hugh. That makes perfect sense. So we'll continue moving through the questions in the chat. Please do feel free to add any questions into there until the end of the session. Our next question is there any news on the possibility of these non-commodity costs moving to gas rather than electricity?
Yeah, I'll have a go at that one. So I've not seen anything specific on that come up. What I did see this morning that might be interesting is I think it's the Energy Security and Net Zero Committee have announced that they're doing a review into consumer energy bills, and particularly to try to hold the government to account for the promise that was made around reducing energy bills. I think the number was £300 for a residential consumer reduction that they would be delivering. I would imagine that those sorts of questions would be part of that, but I've not seen the detail of what that review will be. But I think certainly if you're looking at electricity bills, policy costs of sort of older schemes like the RO and FIT in particular are quite a big element that feeds through into high electricity bills and can work against the sort of net zero and electrification agenda by making electricity more expensive as a result. I think related to that as well, and again, just on the topic you covered on RIIO-3 for TNUoS, that sort of thing, I'd hope is also part of the review as well, of just understanding actually what are the consumer costs of the investment that's needed in the system over the coming 5 to 10 years, and making sure that is apportioned fairly in an efficient way, and delivering the right outcomes for as many people as possible.
Great, thanks, David. Next question. If RAB is paying for new nuclear investment, what is EDF Gendex paying for, and how is this additional value translating into new nuclear investment?
So, so the generation declaration certificates, so think of REGOs for renewables, a common thing. There's an equivalent that's been issued for nuclear generation as well, where that is low carbon. So they are just the nuclear equivalent of REGOs, basically. So where REGOs in the renewable world provide an extra subsidy effectively for renewable generation, and encourages investment in that by increasing the revenues for it and recognizing the low carbon value of that. It's a similar concept, but for nuclear.
Great. And as the second part of that question, how is this additional value translating into new nuclear investment in terms of the RAB charge?
Yeah, so it's probably not so much a direct factor, but more a general recognition of the value that's there of nuclear in terms of its low carbon credentials, and improves the business case by being an extra revenue stream.
Okay, great. Our next question is quite a long one, so I'll just read it out. For 2025 to 2026, as the financial year, using a figure of £100 for energy purchased, is the split of this retail amount edging towards, for example, a 55% for pass-through costs and a 45% for wholesale costs over the £100 of energy purchased, perhaps reflecting the move towards the decarbonisation agenda?
So I'll have a go first, and then Hugh or Dan, feel free to add anything onto that. I think it varies customer by customer. It's the first thing to say. So I'm talking kind of overall average terms of what it looks like, but individuals might see something different. I think if you go back a few years, you were looking at obviously much lower wholesale prices, and non-energy costs were sort of 60%, maybe 70% at times of an energy bill pre the energy crisis. As this question flags, wholesale prices are now higher. So if you take a view of 100, you're probably still at broadly a 60% type level. So what that really means is non-energy costs have increased at a similar rate to wholesale prices going up. Part of that is definitely driven by sort of the move towards a more renewables-led system, and that comes through in a number of ways. So some of it's the direct subsidies through things like the CFD cost. Some of it's more security of supply that's needed to manage periods of low renewable generation, which comes through in the capacity market cost. And then also the NESO's kind of management of more renewable volume, more intermittent volume being on the system, and how you ensure supply and demand match that has increased BSUoS costs and is now starting to feed through into TNUoS costs for investments needed in the transmission network, and potentially DUoS costs in the future for the distribution network. So it's definitely part of the story. There's also other factors that feed into that, though, like interconnection with Europe, that can add extra complexity to the system, and a more complex system generally becomes a more expensive system as people try to manage that complexity. So yeah, broadly speaking, you're probably still at around 60% of the bill is non-energy costs, even at that kind of £100 a megawatt hour wholesale level. And certainly part of the story is the move towards a more renewable-led system.
Great, thanks, David. Hugh or Dan, do you have anything to add to that?
Not especially. I think David, you're right. I think the 60-40 split is where we're currently at, and I think that's still, you can see that in the monitor report as well. There's a little bit of a breakdown of what non-energy costs make up that 6%, what proportion of the 60 and the 40 and the wholesale.
Great.
Yeah, I think it does fluctuate as well with just the base level wholesale costs. Obviously, I think during the energy crisis it was a lot higher. I don't remember the number now, but maybe like 70% wholesale costs, 30% non-energy costs. But yeah, I think generally sort of non-energy costs will be sort of increasing a bit year on year.
Yeah. Great, thanks, Dan. Thanks, Hugh. Our next question is, are EDF ready to incorporate these new charges into billing? And has this billing been trialed and tested so that we reduce the risk of unforeseen billing issues or delays?
I'm not sure is the answer to that. We don't deal directly with the billing system. I'm sure we can take that question away and answer offline that person.
Yeah, so I can, as David said, we're not sure, but I can add a little bit to this question. We are looking at it. Obviously, these are new charges, but we are figuring out how to incorporate these into customers' bills, how to do reconciliations for backdated charges, and how we'll do that going forward. There will be communications released on this as soon as we have confirmed everything, and we are going to keep customers updated, and we'll have a rough idea of when these charges will be reconciled, so that will help customers do their budgeting for the coming year. But we will take that away to check with the experts to see if we have had any more updates since I was told about this. And yeah, we'll follow up with an answer on that one. So our next question is, I think, more of a comment than a question. So it says, but REGO additionality is also questionable. Now most renewables are contracted through CFD. Don't know, David, you or Dan, if you're able to respond.
I think that was a response to one of the questions earlier. There are many views on sort of validity of REGOs and whether it's greenwashing and an extra value that comes through from that that people can definitely hold. I think purely from a commercial point of view, where it is an expected revenue stream for renewables, it is something that's factored in. So yeah, with the CFD scheme, yes, a lot of new renewables are going through CFD and getting investment that way. If they weren't expecting to get REGOs and the value of REGOs from their generation as well, then I would expect they'd need to have a higher strike price and recover more through the CFD mechanism instead. Ultimately, renewable generators, low carbon generators, need to get a certain amount of revenue to support investment and build their sites. So however they get that, they will still need to get to the same number. And ultimately, that the way the system's designed, that tends to be paid by suppliers and consumers to fund that.
Great. Thanks, David. So in our Q&A function, I can't see any more questions in the chat. So we'll just give everyone another minute as I'm reading through our sort of close of the webinar and telling you all about what you can keep looking at. So if anyone has any last questions, please put them in the Q&A function now. So yeah, thank you to everyone for their questions, and thank you especially to our presenters, David, Hugh and Dan, for sharing your valuable insights today. On the screen, you can take a look at our programme of webinars across the year. They are there to keep you informed on the latest power market and NEC updates, and to allow you to ask any questions that you're unsure about or that would help you with budgeting and forecasting and any information going forward. You can register to attend any of these webinars by heading over to edfenergy.com/large business and clicking on the TalkPower events page. The link is also on the screen there. Before you go, we would love to hear your feedback to help us continue to deliver the right content for you. So if you could give us a minute of your time as you're leaving the meeting and complete a quick survey, we'd really appreciate your valuable feedback on that. We will take away that question on billing with the new charges of EII and RAB. So we will follow up with an answer on that to get more clarity. I will caveat that it is a work in progress. We will make sure customers are aware of any changes and updates as and when we have them. But you will have to bear with us as the charges are new. So we have as much visibility as you do at this point. If we didn't answer any of your questions today, please feel free to get in touch. Our details were on the screen on the previous slide, so you can email us at letstalkpower@edfenergy.com, or you can stay in touch with latest industry news and updates by following our dedicated EDF Business Solutions LinkedIn page. So thank you again for joining, and we will see you in the next quarter for our next Monitor webinar. As we said, the recording will be available after the session for anyone who wants to watch it on demand or joined late. Thank you, everyone. We'll see you next time.
Thanks.
Thank you. Bye.
Bye.